Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. We get expectations as Nigeria Mulls one-time 50% windfall tax on bank forex profits. And Namibia gets ready to become the world's newest oil hotspot. Plus, producer price inflation in Ghana inches up to 25.9% in June. Hello, welcome to the program. I'm Ladi Williams. First off, let's get a check on what's happening in the metals market at this time. We're seeing gold there hitting a new high at this point, 2,000. That's a new high from yesterday, but inching even higher, $2,467 per ounce. That's for gold there. Really bullish run, 0.30% up, and we see silver on the flip side. That's going down $30.71 per ounce. Doing the opposite of what we're seeing with gold there. So gold is the only one shining right there with most of the metals we track. Palladium, that's moving, trying to get closer to that $1,000 mark per ounce, but $951, 0.34% down. So that's how the metals market is looking. All about the interest rate cut expectations, and that's what's boosting gold at this time. Let's get a check on oil now. See, oil prices ticked higher today, buoyed by a bigger than expected weekly decline in the U.S. Crude stock. So we saw the gains earlier today, and the gains continue. $85.21 a barrel. That's for Brent crude, 0.2%, and we see WTI, the U.S. grade, $83.16 a barrel, up bigger at 0.4% this afternoon. Well, we have some data from the MBS. The average price of automotive gas oil, also known as diesel, that rose to 1,462 naira per liter. So when you look at it month to month, we see a rise there when you compare to May, 1,403 naira per liter. June, then we see 1,462 naira. So that's a rise. Then for PMS, yeah, that's the one that eats at our money at this time, our disposable income. But we see downward movement compared to May. Quite a marginal drop there, about 2%, but 750 naira, that's what we had per liter for June, compared to 769 naira per liter in May. So we'll see a marginal drop there for PMS. Well, the management of Dangote Industries has commended the Nigerian Upstream Petroleum Regulatory Commission for its interventions in the oil company's crude supply requests from international oil companies, as the IOCs. However, the Vice President Oil and Gas for Dangote, Mr. Edwin, stated that IOCs have consistently frustrated the company's request for locally produced crude, forcing them to buy at a higher price from trading arms. Mr. Edwin urges NUPRC to address the issue of pricing, noting that the company has had to pay about $2 to $4 per barrel premium above the official price set by the NUPRC. And we see experts and economists setting up their crystal balls now to get a sense of what to expect for Nigeria's economy in the second half of 2024. The latest from the Lagos Chamber of Commerce and Industry. Experts have preferred strategies for a possible soft landing for the Nigerian economy. Take a listen.
The Lagos Chamber of Commerce and Industry 2024 Mid-Year Review and Outlook is, as expected, a meeting of economists and think tanks of the Nigerian economy from the private sector.
Nigeria has gone from 3.3 to 3.1.
Economist and Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani, gives an overview of the current situation.
Fuel subsidies is work in progress, being reduced, but there are still subsidies in the system, and more coming in through import waivers and all of that. The government introduced more aggressive in its tax collection and tax rendition policy. The minimum wage is a hot potato. Nigeria's debt burden, in terms of debt, the liabilities have increased. The assets which has been deployed, the use of proceeds is still in question. Domestic debt has skyrocketed, but not only that, in the last 3, 4, 5 years, the people have subsidized the government because treasury bill rates were 2-3%, while inflation rate was 24, 25 at that time. Now, because interest rates have increased more to to reflect market reality. The debt service, not only the debt has increased, the debt service burden is an issue that deals with us, right?
That allows us now to see federal allocation increase significantly and therefore available to share.
Chief Consultant of B. Adedipe, Dr. Biodun Adedipe, food inflation is his biggest concern, especially with the insecurity factor which is keeping farmers from production. This has also limited raw materials for manufacturers.
When food inflation now starts to affect daily living, then we are at the very edge of crisis that can become a repeat of May 1989. If we are going to transform manufacturing, let's just aim over the next 30 years to do 10% of what China did in infrastructure. Why 10%? Land mass of Nigeria is 10% that of China.
The International Monetary Fund has recently downgraded Nigeria's growth for 2024 to 3.1%, citing weaker growth recorded in the first quarter of the year. This represents a 0.2% below the earlier forecast of 3.3%. Economists, however, believe that with more intentional steps towards growth, the economy could outpace these forecasts.
All right, so our first conversation now, you see the federal government of Nigeria is planning to slam a one-time 50% tax on windfall profits booked by banks on massive currency gains after the naira was devalued last year. Join us now to analyze expectations. If this is approved, is Tajuddin Ibrahim, Director, Research and Strategy at Chapel Hill Denham, joining me right here via Zoom. Great to have you on the show.
Thank you so much, Ladi, for having me on the show today.
So why do you think the government is, pursuing this at this time? And do you think the banks will be fond of this?
So I think it is in a way to take from the bank what, naturally speaking, they could have taken from the general public. So we recognize the fact that the government wants to generate more income in form of tax, and to rely less on the oil and gas sector and rely more on tax revenue. So it seems to me to be one channel for the government to generate tax income instead of coming to the public to raise tax rates, for instance, to raise the VAT or to raise the company income tax. So I think it is not a bad move at all, in my view.
How do you see this impacting, bank profits, going forward? And this is it possible this could be some kind of continuous process, for the banks?
Well, I think it could be a continuous process for the banks, because if you take a look at it, we estimate that about 4 trillion naira was what the banks generated in form of, FX revaluation gains in 2023. And the government, looking at around 50%, suggests that about 1.5 to 2 trillion naira will be raked in by the government in terms of what I call new money. And another way to look at it is to recognize the fact that the banks do not, utilize these FX gains in form of dividends. It is also, at this point in time, not count as part of what the CBN is looking at as, part of their capital. So based on the current capitalization exercise going on. So I think it is some form of, money that the banks can, part away with to support the overall objective of the government to build infrastructure. Because if you look at, what the government is targeting, it is broadly speaking to spend on capital projects, which I think is positive for the overall economy. So I reckon that this most likely will be on an ongoing basis, because banks over the medium to long term, stand the chance of generating revaluation gains in the economy.
So I guess this is not going to impact the banks at all, because we know right now the banks are tapping the markets to try and make the recapitalization exercise by the central bank. So I guess nothing to fear here.
Nothing to fear, actually, because the current capitalization exercise by the banking sector is not capturing, retained earnings as part of their capital. What the CBN is asking for the banks to do is to bring in new money in form of equity, and that is the reason we have been seeing capital raises, public offer, right issue, special offer by the banks. So it does not really have a major effect. But if you look at it from an investor response standpoint, investors are responding to it negatively because the banking sector index, as we speak for today, as at now, is down by about 1.28%. So that in itself does not look like a good development for investors, because it is part of their profits that could have been distributed as dividend that the government is taking away.
Right. I guess the investors are already reacting to that news at this point with the banking counter down, as you said. But do you see other industries in Nigeria needing a windfall tax at this point?
Well, I think, other industries at this point in time, to my mind, will not be burdened by the government. And that is the reason that they are not looking at, increasing the company income tax, for instance, to get this new money from the financial, sector. If they had raised the company income tax, all the companies in Nigeria that are eligible to pay tax would have to pay higher tax. And it will affect even those companies that are not, profitable, and those that are struggling as we speak in the current environment. So, but the government is strategic and focusing on the banking sector because of the huge FX gain that they made. So I do not see them extending this kind of a development to the other industries of the economy, in my view.
All right, definitely. I hope those companies benefiting from the pains of consumers at this point, I hope they get some kind of windfall tax. But thank you so much. It was great having you, Tajuddin Ibrahim, Director of Research and Strategy at Chapel Hill Denham. Thank you so much.
Thank you for having me on today.
All right, we'll take a break now and we'll find out what's happening at intraday in the markets right here in Lagos, Nigeria. That's the moment. Do stay with us. Welcome back. Well, time to head straight to the market now. And yeah, we did get an update there that the banking counter is already reacting with investors selling off some banking stocks with that news on the tax on bank FX profits. And we also see another one, the central bank intervening in the FX market.
In the FX market, this time around.
20K.
Yeah, selling to the BDCs, that's the Bureau de Change operators. And we did think that they had stopped selling to them, but all of a sudden they're back doing that.
They're back.
They must have their reasons, and I'm sure when Caleb Alimi joins us, he's going to be able to give us.
And we saw the weakness yesterday and a couple of days ago. So they're selling to them at 1,450
naira to $1.
So we should expect some strengthening at this point.
We hope
hopefully.
so. We hope so. But this is not all artificial, inflows into the market. Well, interventions are just superficial because they kind of like putting a bandage on a wound and not actually treating the real
But I'll take the bandage at this point.
Oh, really? So let's just kick off with major stocks in Africa, which were, performing in, say, mostly in positive territory at intraday, except for Nigeria's NGX, it was trading down 0.05%, back to 99,000 level there. But South Africa was in the green at intraday, 0.48%. That's nearly 0.5%. Also, Egypt's EGX30 rose at intraday. It was up 1.15%, and that's a two-day rally for that index. Very great one, still at the 28,000 level. And Kenya, however, closed Wednesday's session in the red, bucking the positive trend we've seen for that exchange. Now let's touch on activities that have implications on Nigeria's financial markets, especially the FX, fixed income space, equities, all implicated in this. And Caleb Alimi, chief dealer, Providence Bank, joins us. Good afternoon, Caleb. It's always good to have you in the program.
Good afternoon, Will. Thank you for having me.
Caleb, the hot news, just, you heard Ladi and I, if you did overhear of a conversation that CBN selling $20,000 to Bureau de Change operators at 1,450 naira to $1. Just to meet retail demand, but we're wondering, the CBN had put a stop to this. Why go back to it now?
The simple answer will be demand and supply. There's a lot of demand for FX at this time. We're at the peak of the summer holidays are kicking off. Nigerians will continue to travel around the world and they require, top dollar to spend at their various destinations. So it's only natural that the CBN will come and support the market to continue to sell back to the BDCs. We've seen that in the past, when they were selling to BDCs, we did see, rates actually strengthen or appreciate. And since they stopped, selling to the BDCs, we've seen, rates continue to weaken, especially now that we're going into the season of the holidays, summer holidays. And like I said, Nigerians will continue to travel around the world. I think it is a good development for CBN to begin to sell to the BDCs. I think they're trying to bring the rates down under 1,500. You probably already know that parallel market is doing somewhere around 1,600 levels. And, NAFEM closed yesterday at 1,581 thereabouts, So if with the CBN coming into the market to intervene in the banks today between 1510 and 1530 levels, and then announcing that they'll start selling to the BDCs as well at 1450, expecting them to make just a 1.5% spread and all of that. I think all of that is going to strengthen, the naira and bring rates down.
I'm just wondering, Caleb, for how long? How long will this strengthening last? Because to me, I feel it's artificial and superficial. Because how long would the CBN keep intervening? How much money do we need to sell to the BDCs to actually keep the naira at 1,000, probably below 1,400 naira to a dollar? What do you see the CBN doing to ensure that the naira remains at a stable rate and not overshoot as we've seen in recent times?
The CBN has continued to explore different avenues to ensure there's supply in the market. Liberalizing the IMTUs to sell to the banks, trying to bring in the IOCs to sell to the banks. But the CBN still happens to be the largest supplier of dollars to the market and sort of like the most consistent and the most reliable in a way. Now, they have to continue to intervene, especially because their core mandate, especially during this administration, is price stability. And they've also seen that if they can keep exchange rates stable, then they can probably keep inflation in check. So I think they'll continue to, adopt all the avenues in their arsenal to just, bring it down. And they will continue to intervene from time to time. It has not been consistent. I don't expect it to be consistent. It's probably be for this season. And just to bring it down under 1,500 and let market forces continue to determine. And then they come back in again if the market is going haywire to sort of bring a bit of calm into it.
Okay, still speaking of FX now, we're talking about the bill seeking to amend the Finance Act 2023 so that the government can impose a one-time windfall tax on banks' foreign exchange profits that were acquired, they earned in 2023. It has passed the second reading now. And for those who don't know, a windfall tax is a tax that is levied by the government on sectors or businesses that have unfairly benefited from the favorable market conditions. But the president said it will be this part of this revenue will be used to fund the additional 6.2 trillion naira budget that was added, the supplementary budget. What are your thoughts on this, Caleb?
I listened to Taj, who analyzed the situation initially just before me. He mentioned it as a positive development. I think it is quite interesting, because we have to look at some of the things that the CBN said about that profits for banks. First of all, it did not allow them use it as part of their capital. It did not allow them distribute it to investors as dividend. And suddenly they're introducing, a 50% windfall tax on that. I think the investors are already showing their sentiments in the market by, what we see is already happening to the banking index on the Nigerian Stock Exchange. I think it's an interesting development. We want to see how they're going to implement it because, the reasons why CBN did not allow banks, capitalize that part of income, it'd be controversial. Some say it's paper income, some say it's notional income and all of that. So, and then now the government wants to tax that portion to fund the budget. I think what still remains is that the government is very desperate. They need a lot of funds and they're looking for avenues to fund that deficit budget, so to say.
Well, we'll keep track of that development. Like we say, you just mentioned maybe the federal government was just waiting to lay a tax on it, and that's why they asked the banks not to spend the money on to pay dividends to investors. But speaking of the augmented supplementary budget of 6.2 trillion, which was sent to the Senate yesterday, what impact will this have on the market?
The market expects, it's just signals to us that there's further borrowing. They require more money to run the economy. And so what investors will continue to demand will be higher interest rates. There is another MPC meeting next week where investors or the market generally expects another hike, given that inflation seems not to be slowing down. With that hike and then with an increase in borrowing, there can only be one expectation for investors. We would expect that yields continue to trend upwards.
Now, the market appears to be running on fumes. If you see what was, on the screen there, the OMO auction that, took place yesterday. No sale, Caleb? Talk to us about that.
So, it comes as no surprise that it is no sale. Many of us are used to the times where at any auctions are oversubscribed, but this tells a story in itself. The market has been negative all through last week and up until this week. We opened the week at minus 830 billion, currently at about minus 650 billion, and then the CBN came in to try and mop up about 200 billion and could only attract a paltry subscription of less than 40 billion. That tells a story in itself. They didn't sell because I believe it would not have impacted the market the way they wanted it to impact the market. So that's why we can see that the market is, telling its own story. Things are really, really tight. This CBN has adopted a tight monetary approach, and the market is, showing that.
Seeing what we have for Wednesday is negative, over negative 648 billion, really tight. Could you tell us what is currently applicable right now? What's happening to the market? What's the current liquidity state? And how are investors playing to that? And at what end of the curve of instruments they're even buying?
So investors are not really buying. What we find is banks actually trying to create liquidity for themselves by offloading, whatever short-dated securities they have. So short to medium-term securities are, already trading northwards of 22%, and they may continue to rise, because everybody's just trying to create liquidity for themselves. The market currently is about negative 450 billion. The figure just got released a while ago. So we see that liquidity is improving, however, rather slowly. There's been an inflow of about 65 billion in coupon payments to that has also contributed to, the improved liquidity situation that we're having.
Okay, so what's the outlook? What do you see the market doing today and probably for next week? What's your outlook for the market?
We expect it to remain bearish. We expect to continue to see sell-offs in this in the short end of the curve, for the short to mid-dated treasury bills. And given that there's a bond auction next week where the DMO is hoping to raise about 350 billion, we think interest rates are going to go higher there as well. Last time the 10-year paper closed at 21.5%. We think it will close around the same levels or slightly higher given the tightness in the market.
Yeah, speaking of that auction, the bond auction that was rescheduled, that was postponed from July the 15th to July the 24th. Hopefully, we hope that we would see more demand because the last one, we've seen a decline in bond auction demand at the bond auction recently. And it speaks to the low interest rates permeating in that space. Thank you so much, Caleb Alimi, Chief Dealer, Providence Bank, for sharing your thoughts on Business Incorporated.
Thank you, Will.
So let's look at the Gulf now and see how major stocks performed at intraday. There were mixed sentiments there. Abu Dhabi was up 0.48%. And we see Dubai also trading up 0.81%. Still within the region, Saudi is down 0.15%. Saudi Arabia's stock market eased today, and it's on profit taking. It's on its way to snap that 10-day winning streak. And this was led by U.S. interest rate cuts that, investors are optimistic that the U.S. are going to cut rates, but we'll wait and see. Now, Qatar is also down massive 1.01%, and fully pricing in, investors are really fully pricing in that 25 basis rate cut in September after, waiting for the Federal Reserve in the US to kickstart that. Now let's look at, speaking of the US now, let's look at stock futures there, which were mostly higher in early trade today after the NASDAQ recorded its worst session since 2022. Investors are quitting the big tech high flyers now, so we see that NASDAQ drop really big. Now Dow Jones Industrial Average was down 0.1% at 41,000 points there. The S&P 500 futures is up 0.04%, and the NASDAQ futures also up 0.19%. Now on the economic front, we're expecting the jobless claims for the week ending July 13th is due today, and economists are expecting to see claims come in at 229,000, and that's up from 222,000 the week before. As for earnings, we see Domino's Pizza, Alaska Air, and Netflix set to post results today. Now let's look at Asia now. Let's see how the market performed, how they closed Thursday's trading session. Most of the stocks, they fell, Tech stocks are dropping, and so we're seeing a lot of negative sentiments there. In the case, Japan's Nikkei was down 2.36%. That's a massive drop, and leaving that 41,000 level and dropping to 40,000 there. And this is all based on comments from, former U.S. President Donald Trump, raised geopolitical tensions in that space. Now look at other markets there. The Kospi in South Korea dropped 0.67%, and we also see the Hang Seng Index in China up 0.22%. Also Shanghai, well, we'll see, if you look at the Shanghai market, we see that also up 0.48%. And in Australia, we see that market not doing so well, 0.27%, knowing that unemployment has been, the rate of unemployment rose in that country, and I think that's affecting sentiments in that region. So unemployment, these are things that sway sentiments. Investors are looking, is the economy doing so well? Unemployment rates going up. We're just wondering how much money can people spend?
Everything's about data-driven right now.
Yeah.
The politics of things right now impacting all markets. They've called it the Trump trade.
The Trump trade.
Right there.
Right, Trump is really influencing investors right now.
A lot. Thank you so much, Will, for the update right there. With most of the markets we track, and the global space and the local ones. Let's take it on to London now. We have Juliana join us from our London studio. Great to have you, Juliana. So we see inflation numbers out in the UK yesterday, still moving towards the BOE's target of 2% at this time. So I guess things are looking up.
Yeah, that's right. I've got to say, I've got to put a caveat out there. Having spent a couple of days in Abuja, it does feel quite peculiar talking about concerns that inflation in the UK has remained steady at 2%, when, of course, food inflation is reaching 40% in Nigeria. It's absolutely eye-watering. Hopefully those prices come down soon, because it's impossible to live like that, right? And that is the issue we were having in the UK, although, of course, it didn't get that high. It was eye-wateringly high at 11% just over a year ago. But alas, it has come down. It's come down to 2%. That is the benchmark for the Bank of England. I think economists had expected, Laddie, that perhaps it would be much lower at 1.9%. But a lot of economists are blaming Taylor Swift. And I discussed this with you and Inni a couple of weeks ago about the Swifties. She, of course, Taylor Swift, global superstar, pop icon. She had a series of tour dates across the UK, and that has actually contributed to the upward trend of inflation. So if you look, scratch the surface, you can see that restaurants, hotels, they were really pushing up inflation. But due to some of the measures that were put in place by former Prime Minister Rishi Sunak and the former Chancellor of the Exchequer, Jeremy Hunt, like hauling in the supermarket bosses, forcing them to bring down the prices, because when it comes to inflation, particularly where you are, there is a lot of profiteering. Some of these prices don't need to be that high. And those measures have ended in decent results. That's what we're seeing in the UK. So it's 2%. However, we are on a knife edge of what is going to happen on the 1st of August, when the Bank of England Monetary Policy Committee gather, because today we had wage growth data, and those two items are the key metrics for Andrew Bailey, the governor's decision. Inflation and wage growth. And although we have seen a slight decline in wage growth, I think it dropped to 5.6% from 5.9%. It's still high. So I think a couple of days ago, economists were pointing that perhaps there being a drop in interest rates in August from 5.25%. They're thinking now, because wages are still quite high, that they're going to hold on until September. But yeah, 2% inflation rate in the UK is of stark contrast to what our people are currently facing at home.
Yeah, definitely the situation in Nigeria is way different. And I can imagine how you felt getting a taste of food inflation right here in Nigeria with your visit earlier. I'm sure you were really, really surprised.
Yeah, absolutely. Really, really shocked and disappointing. In fact, as we are ad-libbing, it's important to discuss this because this is an important topic. I did actually manage to spend some time with the Senate Committee Chairman on Agriculture. A very small part of that interview will appear during News Track today on the Channel's Business Global Bulletin, as well as a longer version tomorrow on Channel's Business Global, which will air just before your show, Business Incorporated, tomorrow, to discuss food security and urgent measures that need to be implemented, not just discussed. Discussing is one thing, implementing is another. We discussed some of that, and yes, those comments will be transmitted on channels, of course, later today. I
know every year the UK's state of opening of Parliament always gets reactions. Give us a sense of some of the highlights from the state of opening of the Parliament.
Just to say, it's not every year, and thank God it isn't every year, because I don't think the monarchy would be as popular as it appears to be, because it took place on Wednesday, state opening of Parliament. This happens every time there is an election. I can't believe the UK general election was only 2 weeks ago. It feels like a year. So much has happened since then. But yes, pomp and ceremony as to be expected. Some people found it very distasteful because, of course, we brought out the gold carriages and, the imperial crown. It cost millions upon millions of pounds, that short journey from Buckingham Palace to the Palace of Westminster. I don't think it has gone down well, particularly as we're going through cost of living crisis. But the intention of the state opening of Parliament was the opportunity for the King to kind of dish out, spell out some of the legislative policy that the Labour government will be embarking on during this session of Parliament. I won't bore you with all of the details, but some of the highlights include the tobacco and vapes bill. This was introduced by Rishi Sunak, something that Sir Keir Starmer will be taking forward. Basically, in a few years' time, Britain will be a smoke-free generation. Children will not be able to buy cigarettes in this country, which is a massive deal. We are an outlier, the first country in the world to do that. Housing, huge. Rachel Reeves, the new Chancellor of the Exchequer, said that we will be building, the Labour government, Britain, will be building 300,000 houses a year. This is going to give massive boosts to manufacturing and construction. There are other elements, which again I'll be discussing with Simon on Channel's Business Global tomorrow. But I think, the state opening of Parliament now, with what's happening with the royal family, it did leave quite a bad taste in the mouths of hungry Britons who are seeing millions of pounds being spent on a couple of minutes. And then, on the other hand, saying that we cannot afford to take off the two-tier child benefit scheme. Pretty interesting, but it's going to be gloves off in Parliament for the next PMQs, which I believe is next week, Wednesday.
Yeah, I guess people will never really understand the extravagance of the leading political class at this point. But how are the markets looking at intraday today?
Well, the markets were in tip-top shape at At one point today, I think the FTSE was leading the European markets. We do actually have the European political continuity happening in Blenheim Palace in Oxfordshire, England. We've got Sir Keir Starmer, the Prime Minister, hosting about 47 leaders across Europe and the European Union, including Volodymyr Zelensky, the President of Ukraine. Of course, Ukraine is a dominant discussion there, as well as tackling illegal migration and energy security. I think a lot of comments there have buoyed the markets. Also got some company updates from the Frasers Group. Haven't been doing quite well because we just know that consumer habits are changing, the high street's dying, but positive results from them. If we have a look at the numbers more closely, the FTSE All Shares down at intraday, down 0.11%. FTSE 100, the blue chip index, down 2 at 0.15%, but the FTSE 250, the domestic market, that's up by 0.03%. In currencies market, the British pound is trading up against the US dollar by 0.11%, down against the euro by 0.12%, and down against the Japanese yen by 0.07%, Laddie.
All right, Juliana, thank you so much for the update right there in the UK. Thank you. All right, now let's take it on to Europe. The EU has entered talks with Azerbaijan to replace Russian gas exports to Europe. Join us with more is DW correspondent Emily Leshner right there in Berlin. Great to have you, Emily. So why Azerbaijan at this time? Does it have enough gas to supply Europe's needs?
Thanks for having me. Well, at the core of these talks is the end of a 5-year agreement between Western Europe and Russian state energy firm Gazprom. This agreement allows Russian gas to flow to Europe through Ukrainian pipelines, and it is coming to an end at the end of this year. This was a deal made before the war, of course. And though Russian gas delivery has been reduced significantly from 40 billion cubic meters to around 50 billion cubic meters last year, there are EU countries that still rely on Russian gas via these Ukrainian pipelines, like Austria, Slovakia, Hungary, and Italy. So in order to avoid renewing the agreement with Russia, Europe is looking towards Azerbaijan to fill the gas supply needs for these countries in Western Europe.
So is this the beginning of a stronger relationship between Azerbaijan and the EU?
That's a good question. Energy experts say that they simply don't. In the short term, deliveries to Europe are expected to be almost 13 billion cubic meters by the end of this year, and that's still slightly less than what Russia is supplying to these countries. In the long term, though, it might be a different story. Azerbaijan wants to double what it supplies to Europe by 2027. And if it does this, this would be enough to replace Russian gas supply. But it's also tricky because Brussels might not be willing to sign a long-term agreement with Azerbaijan. Europe is trying to wean itself off of fossil fuels and turn to renewable energy. And in order to double deliveries by 2027, Azerbaijan will have to make some pretty significant investments in their infrastructure. Also, Azerbaijan doesn't share a border with Ukraine, so the gas would likely have to be imported through Russia's southern pipeline infrastructure that goes through Turkey, Moldova, and Romania.
All right, Emily, thank you so much for the update right there in Europe. Let's take it on to Africa now. We see a South African-born entrepreneur, and that's talking about Sheldon Tatchell. Began his barbershop business on his parents' stoop in Eldorado Park, south of Johannesburg. Years ago, now Tatchell plans to expand across the African continent. Legend Barbers, his brand, currently operates over 70 hair salons in South Africa. Our correspondent, Innocent Samosa, sat down for a haircut, one of those branches, and spoke to him about his humble beginnings. Take a listen.
Legends Barber, a grooming and style company, is embarking on a new chapter. Founded a decade ago by Sheldon Tatchell in Johannesburg, Legends Barber has grown from humble beginnings to become a household name in Southern Africa. He acknowledges that the journey has not been without its challenges.
With the limited resources that you have, as Legends, we never receive any funding from any government institution. We never receive any capital from anybody, you understand? So we had to basically just grow one step at a time.
With a decade of success behind them, Legends Baba is now ready to embark on an exciting new journey, expanding their footprint across the African continent.
We start realizing that by the popularity of the barbershop, people from other countries started noticing, and people start calling us from different countries like Botswana, Namibia, even Nigeria as well. And people asking, why don't you open shop here? Why don't you open shop?
Beyond their commitment to grooming excellence, Legends Baba aims to foster economic growth by creating job opportunities. Channels Television spoke to Legends Baba workers.
So Sheldon is a strong-headed person, first of all, let's start there. And for him, running the company is something extraordinary. And working with him as well, I've also learned a lot from Sheldon.
The journey's been quite nice, actually. I like how it comes with its challenges that it helped me learn, and I'm enjoying myself. Being a barber is actually nice.
And this is what keeps clients coming back.
I like coming here because, first of all, the vibe in the place is all good. Every barber that you cut with is a well-trained, well-skilled barber.
As Legends Baba prepares to expand its legacy, Sheldon and his team say that they remain dedicated in upholding the values that have defined them from the start. From Johannesburg, South Africa, Innocent Simosa, Channels Television News.
Thanks, Innocent. Well, let's head on to the commodities market. We see yam, a staple food in Nigeria, has seen a significant increase in price this year. Currently, the price of a medium-sized tuber of yam has climbed about 6,000 naira. Depends on which market you're shopping. 140% higher than its price in March, about 2,533% above the peak price of 4,500 naira in 2023. This is quite surprising, given that the period normally falls within the start of the commodities harvest season. Well, join us for more now. We have Halima Dediron, an analyst with Financial Derivatives Company. Great to have you, Halima.
Good afternoon. Thanks for having me.
So it's quite incredible. I tried to buy yam a couple of days ago, and I got this really tiny tuber, and they told me it was about 7,000 naira. So I'm wondering, what's responsible for this price uptick in yam?
Okay, so currently the inflation is at an all-time high of over 34%, while food inflation, which is the bulk of the inflation basket in Nigeria, is over 40%. And so this general hike in price is affecting the services costs, cost of input, and also cost of commodities in general. And this is as a result of so many factors. So if you look at yam farmers, for instance, the cost of seedling has really increased. Not only that, the cost of fertilizer is on the high side. And even the charges, the wages for labor, the laborers on the farm, has also increased compared to what we had last year. For instance, monthly, around 2023, laborers charge about 30 to 40,000 per month. But currently, they are charging at an average of 50 to 60,000 naira. So this factored into the price of yam would cause the reduction in aggregate supply. So for farmers, they have production constraints, which will reduce the volume of their planting. So that is one factor. Another factor is exchange rate depreciation. And one begins to wonder why exchange rate depreciation when yam is not an imported commodity to Nigeria. But we need to remember that whenever there's depreciation, commodities of that country tends to be cheaper compared to neighboring countries. So this is encouraging smuggling of food items out of Nigeria, and so reducing the supply that is meant to be consumed nationally. So even as we are approaching the harvest period, we will see that we might not likely see the price dropping to what we had in 2023, given the factors explained earlier. Though the price will taper, but it will not be as low as what it used to be, because the factors are still very potent and is driving down the expected aggregate supply of of yam in Nigeria.
All right, definitely. We hope these prices come down back to reality at some point. Definitely waiting for that. Thank you so much, Halima Adediran, analyst at Financial Derivatives Company. Thank you.
Thank you for having me.
All right, now let's get a check on some stories. Now, see Ghana's PPI, that rose for the previous month. That's the price producers actually pay for their inputs for production. We're seeing the prices rise month on month. Rose about 2.7% to 25.95%. We normally keep track on CPI, but PPI right there in Ghana also rising. Then Namibia is getting set to become the world's newest oil hotspot, as the country has been seeing about billions of barrels of offshore oil fields, and they're seeing drilling ramping up at this time with multi-billion-dollar deals. So the new kid on the block there, we have Namibia right there joining oil producers right here in Africa. All right, let's get a check on the crypto market now. Let's see what the color is. Today, it's been green back to back. If you can put that up, we know we've seen green moves there with Bitcoin holding up, and we've seen the Trump impact right there on the crypto market. But we know it's been green again and again for this week. But let's get a check on top stories. OKX, a prominent crypto exchange, have decided to cease operations in Nigeria due to regulatory concerns. OKX emailed its Nigerian users to inform them to withdraw their assets from the exchange by August 30th. After the date, any remaining balance on the platform will be subject to restrictions. Then for MTGOX recipients there, their holdings, we're seeing some of them actually, data shows that 55% of these recipients are holding their Bitcoin. They're not taking it straight to the market and they're selling off. Then we see crypto token unlocks in July. A couple of crypto coins are going to be unlocking some of their coins, vested interest there. So definitely that's going to impact the market going forward. Let's bring in Adedayo Adebajo now as the co-founder, ICP Hub Sahara. Great to have you on the show.
Good to be here again. Thank you for having me.
So it looks like another one bites the dust at this point. OKX, they're saying they're leaving. They sent an email to their Nigerian users that they're actually going to be keeping their services away from Nigerian users at this time. How are you seeing this?
Well, like I said, so this is something that most people believe it's not possible, but then the government is sending down these crypto exchanges heavily, is making it quite difficult for Nigerian traders to be present on most of these foreign platforms. And this is just one of the ways that regulations tend to kick in eventually, making it also possible for local companies to set up their own crypto exchanges for Nigerians, because after all, we believe we have the population of traders, 220 million people, out of which a certain amount of them is actually trading on various of these exchanges. So the government is seeing an avenue for them to be able to tax, and therefore exchanges that are not willing to bend to the rules, then they need to be kicked off the game. This is the game of the government anyway.
Right, the game of the government, quite interesting. But we're seeing some unlocks coming for most of these cryptocurrencies at this time. I guess we're going to expect a lot of volatility, with these unlocks.
Yeah, definitely we're going to be seeing some red in the markets very soon. Vesting period as compared to the traditional financial industry like the stock market, where we tend to have new shares being released into the market. Vesting period is pretty much because most of the crypto tokens are pre-mined. Pre-mined in the sense that the entire token that will be in circulation forever have been mined already. So majority of them are vested for a period of 2, 3, 4 years. So majority of the early investors will then they will have to wait for a couple of months to years before they have access to their tokens. And even most especially the team members for this particular crypto project. So over time, most of these tokens are now being released. And just like you said, we are having over 700 million token to be released, $1 million in value of token to be released soon. And sometimes the market is not prepared for this as compared to the financial markets. So definitely we are to be expecting some major volatility, which sometimes demand would not necessarily meet the supply.
Right, and we're seeing some of these MTGOX recipients, actually about 55% of them are looking to hold some of their Bitcoin. Maybe we might actually see some recipients of these vested coins actually maybe want to hold?
Well, it all depends on the nature of the project itself. So one of the reasons why vesting period is quite important is that it enables the project itself to build the market around their project, to build some utility around the coin itself. So by the time the token is now being increasing in value over time compared to when it was released on the ICO. So some of the investors might actually see the need to hold further because they believe in the project. But should in case they've been waiting so long and they've seen the value of the token reducing, it's actually a particular perfect time for them to reduce their losses. So majority of them might actually want to sell should in case they feel they'll have the opportunity of buying back at the bottom.
All right, definitely. We'll keep tracking to see how the markets and most of these investors actually react to all of these releases. Thank you so much, Dedayo Debajo is the co-founder, ICP Hub Sahara. Thank you.
Thank you very much for having me once again.
All right, so that's the show today. That's how most of the markets we track. That's how they're looking. We're seeing expectations for the local bourse. How's it going to close today? Fingers crossed. At this point, you can visit channelcv.com for more updates. I'm Ladi Williams from Media Team right here at Channels HQ. It's bye for now.